Good morning, everyone. Welcome to June 21st Market Minute. I'm John Hopkins, President of Invested Central. Right now, we got the Dow futures up 7, the S&P futures are flat, and NASDAQ futures are flat. Both Asian and European shares were mixed overnight. Futures were flat ahead of the bell Wednesday as traders awaited the interest rate announcement by the Fed. The Fed spoke, and the initial reaction was negative with a reversal late in the day. By the time the market closed, the major indexes had barely budged. Today we'll get weekly jobless claims, existing home sales, Philadelphia Fed, and leading economic indicators. We'll also get earnings from CarMax, Conagra Foods, and Oracle. On the S&P, we've got the 20-day moving average at 1330, the 50-day at 1346, and the 200-day at 1294. The S&P closed at 1355 with support at 1346 and resistance at 1365. There was a lot of build-up to the Fed's rate announcement on Wednesday, and at first it looked as though the market could be in for a rough afternoon. Instead, after a quick move to the downside after the announcement, the market steadied, only to fall again after Ben Bernanke faced the press. Ultimately, by day's end, the market had barely budged, leaving the bulls in charge for the moment. Next up on the S&P to the upside is 1365, then 1369. To the downside, we want to see if 1346 holds on any selling. It makes sense to lay low when the market's struggling and also to get more aggressive when signals are pointing to the upside. So, do your best to protect your capital in times of uncertainty, but open up the wallet once the market's out of the rough waters. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.